Hi guys, welcome to this Money Control live stream. It's a Friday morning and the cues coming out of global markets are fairly positive. Looks like we are in for a Fab Friday on Dalal Street. The GIFT Nifty above that 19,300 mark. And of course, lots of stocks to watch out for in today's session, including the likes of Tata Motors and Titan. Well, if you have any stock related queries, send them into us on our YouTube feed and we'll try and take them up with our technical expert on the show. But as usual, before we go any further, let's take a look at the top headlines at this hour. Wall Street clocks its best day in months, extending Fed fuel cheer for a second straight day. Treasury yields retreat and investors get optimistic that the central bank could be done with hiking rates in the current cycle. Meanwhile, Apple's sales dip for a fourth straight quarter and its outlook for the December quarter disappoints. Asian markets open higher on a strong handover from Wall Street. Most indices trade higher, but Japan remains shut on account of a local holiday. The GIFT Nifty, as I mentioned, indicates a higher start for the Indian market. At the current juncture, GIFT Nifty is above that 19,300 mark. Crude oil breaks the three-day losing streak. Prices rise over 2.5% as risk appetite improves after the Fed hints that it could be done with hiking interest rates in this cycle. Brent is back near the $87 per barrel mark. Tata Motors in focus today as it delivers a very strong set of numbers in the second quarter backed by robust JLR margins. The company has also raised the JLR business EBIT margin guidance to 8% from 6% earlier. Among key earnings to track today, Titan will report second quarter numbers where margins could weaken on the back of competitive intensity. Commentary on festive demand is something that will be keenly watched out for. Zomato and Indigo will also be in focus as the numbers will be trickling in later today. And on that note, without any delay, let me bring on board our guest for today. Joining me is Raja Venkatraman of Neotrader. Great to have you on the show, Raja. Looks like we are set to extend the gains that we have seen in yesterday's session. 19,200 seems to be a given on the upside for today at least.
The way the market is poised right now, we were expecting that the markets would continue to be range bound, and that is something which all of us were expecting. But then what has really happened is as the global cues began to dominate the proceedings on the downside, now the global cues are also helping the markets revive on the upside. So the positive news about the stoppage of the interest rates hike has definitely fueled some bit of relief amongst the currency triggers. I always believe that currency is a very important segment of the entire financial world. And they literally dictate the trends across every asset class. So the same thing has happened once again with the cooling off of bond yields. The markets are looking much better right now. And the dips towards 19,000, it tested 19,000, but then it did not persist. So that was a good sign now. So for the days ahead, 19,000 will once again be an important point or a line in the sand as far as the Nifty is concerned. And Bank Nifty, we would continue to target 42,500 to 42,000 as a good support zone. So as long as these levels are held, it's a good opportunity to consider now for remaining on the long side. But then there is a caveat here. The overall, based on my time signature studies, I find that the market will show some positive bias, but then one should not construe this to be a new high kind of a scenario. The markets are going to have a little bit wider range, so maybe a 700 to 800 point range for the entire month as far as Nifty is concerned, and maybe Bank Nifty towards the region of 1200 to 1500, and that's what one should play for. So now if I am able to look at the entire set of scenario and find out how long can the Nifty persist, the targets are looking towards yesterday. If you had observed, there was a freak high which was flashed, which was around 19,450. So 19,450 to 500 would somewhere be the region where Nifty could go at the current juncture. Now, Bank Nifty would go to the region of 44,000, which was the earlier support, is now become the resistance. So these are some zones which I'm tracking in the indices. And yes, one should look to buy on dips and sell on rally for this entire month. That's what is the approach which I will maintain for the rest of the series.
Well, that's a wide range you spoke about, Raja. Of course, buy on dips and sell on rise. These are the kind of strategies one should be adopting going forward. Well, hold that thought. We'll come back and discuss specific stocks with you, Raja. But let me also bring on board, Saji John of Geojit Financial Services. Joining in, he's the lead auto analyst at Geojit, and we will be discussing auto numbers. In fact, Tata Motors numbers that are pretty strong. JLR margins saw a great turnaround. In fact, JLR EBIT margins guidance has also been raised by Tata Motors. Let me get in your first thoughts on Tata Motors. Saji, numbers look pretty strong, especially on the JLR front. How do you think the road ahead looks like, particularly when it comes to the JLR business?
Good morning, Nandita, and to all your viewers. As you already said that the Tata Motors have came with a robust result. As you know that the volume growth was 7%. Overall, the volume growth was 7%. And it was largely driven by the ease in the supply, better realization and superior product mix the company has. If you talk about JLR, JLR's all the brands has performed well. They have currently an order book of around 1,68,000. Most of the orders are coming from the Defender, Range Rover, Range Sports Rover. And around 74% of the order books coming from these three segments. And if you talk about the margin, the company has reiterated the margin to 8% on the last time, and is expected to go to 10% going forward by 2026. Overall, the company has highlighted that the margin for the JLR is to continue, and there is a pent-up demand. All the geographies have extremely done good, except China, which is settling down. Back to the pent-up demand, and it has bring the demand to a much better level. If you talk about the inflations in the European market, the company highlighted that there is still room for incentivizing the customers. So we are seeing a positive growth for the JLR coming time.
All right, positive growth expected for JLR. But let's talk about the domestic end of the business as well. Domestically, it was a mixed kind of a performance. If you look at CV business, that did well. But the passenger vehicle business saw some bit of speed bumps, right? So how do you expect the domestic business to pan out? Do you expect the passenger vehicle end of the business to recover in the rest of the fiscal going forward?
See, if I talk about the commercial vehicle around 3% volume growth. That was mainly due to the availability constraint of BS6 phase 2 vehicles. The margin was strong, came to 10%. There was 500 basis expansion in the margin. Commercial vehicles, the company has taken a lot of initiative to push the demand. They have got tie-ups with Fleet Edge, and they have also made an investment in the Freight Tiger to increase the profitability of the fleet operators. Company is trying to bring into a better ecosystem of the connectivity. So I think that the second half would be a little bit looking for a single digit. However, seasonally, the second half is likely to be better because of better infrastructure push. If I talk about the passenger vehicle, there is a transition which is happening in the passenger vehicle. The last year, Tata Group has done outstanding performance compared to his peers. So there will be a base effect will be there. Not only that, the company have lined up a lot of launches on the October, a facelift of the Nexon EV and Nexon and Tata Harrier Safari. So the order books looks good for the company right now. The EV portfolio has significantly doing better from 5% to 8% to 13% of product mix the company has right now in the EV portfolio. There is substantially they were able to bring down the IC engine for diesel and for the petrol. What we are seeing is that there is a consolidation which is there in the market because of the high base last year, and we are expecting a low single digit growth for the industry, and the industry has registered a 5% growth, which is in line with our expectation. Moreover, what we are seeing is that the margin expansion is likely to help the profitability to move further for most of the company, which will resist the valuation down the downside. But still, we are seeing a lot of activities will be there in the EV side, where multiple launches are likely to come by the companies in the second half second half to the coming years. So we are looking for a consolidation for the passenger vehicle in the near term. Yeah.
Right. The company has also, the CFO had also indicated that the company will start building cars from the Sanand plant that it has acquired from Ford Motors pretty soon. What kind of a capacity addition do you expect once the plant gets operational?
See, already they are running out of the capacity. So, the Sanand plant is likely to bring more, capacity expansion, will bring more, room for the company to, put sales on the front. What we are seeing is that there are a lot of lineups and having 50,000 and almost neck to neck, which is going with the capacity. So that you have to see how the the capacity and the demand situation gonna go forward.
Right. Lastly, I want to get in your thoughts on the stock, going forward, given the fact that we have seen the stock gain over 60% on a YTD basis. Do you think now the valuations are looking a little stretched and that the positives may already be priced in? Or do you see a case for, a more upside, given the kind of stellar margin recovery that we have seen for JLR?
See, JLR definitely have shown on for the last last 3 to 4 quarters, the company was lagging due to supply issues. Now most of the thing has been settled down. What we are seeing is that like the JLR is likely to reach to their pre-COVID level numbers, which is 110,000 units. So I think in quarterly. So I think the last year also they have done a good performance. This year I think there are a lot of room to grow further. Interestingly, what we are seeing is that there is the initiative that the company is taking for the commercial vehicle as well as for the passenger vehicle. They have through Avanya, they have actually made a strategic relationship with collaboration with the JLR and the Tata Motors Mobility, where we are expecting a lot of pedigree of the JLR to be used for the Indian manufacturers in the mid SUV segments. So there are a lot of expectations are there from the Tata Motors. We have a positive rating for the company. We continue to maintain our positive rating for the company.
All right, expect more upside on Tata Motors going forward. With that, Saji, thanks a lot for taking out time and joining me and sharing your thoughts on Tata Motors with us. But let me also take the brokerage comments that are coming in on Tata Motors. CLSA has maintained a buy rating target price at 800 rupees per share. In fact, it has said that even the CV business has shown a good beat in terms of margins in the second quarter. Jefferies has a buy rating target price again at 800 rupees per share. And even Jefferies has pointed out that aside of the JLR business, aside of the strength in the JLR business, the PV and CV business, the domestic business EBITDA has also improved pretty significantly on a quarter-on-quarter basis. Morgan Stanley also has an overweight rating target price at 711 rupees per share, and deleveraging in FY24 is something that would bode well for the stock going forward. That's what Morgan Stanley believes, and also says that the EV scale up in FY25 would be a key catalyst for the stock going forward. But let's get back to Raja and discuss the stock of the day. According to me, it should be Titan, given the fact that we will be, getting in the second quarter performance numbers later today. Revenue is likely to jump. Profit could see a marginal rise. Going forward for Titan, ahead of earnings, how would you position yourself? And would you say that, the stock is set to sparkle going forward in the next 2 to 3 months of the rest of the year?
Yeah, so Titan has always been in the limelight, especially during the festive season, and the stock has done reasonably well. So after the sharp move which we saw in the period of August to say mid-September, the stock has been basically spending some time in consolidation, or you could also say profit booking. Now, with the current trend which is emerging, and the festive season also coming in play, the stock could definitely tend to perform well. It has come down into a decent set of supports towards 3100, and that seems to be a good point to buy into as a trader, as an investor, because upside is looking towards 3600 to 3800 within the next 3 months. So it's a good time to look into Titan. And if you are looking to trade it, invest it, then it's a good time to buy. From the way the charts are getting set up, it is giving a hint. Always price always acts ahead. Like if you had observed Tata Motors yesterday, there was some hint of positivity, and should get reflected in the prices as well. So the news and the price are seeming to match in Tata Motors. I believe that the same might happen in Titan as well. So overall prospects looks encouraging. So one should look to have a positive bias in Titan for the targets mentioned.
All right, positive bias on Titan. In fact, you can look to buy this stock both for trading and investing purposes. But let's shift focus and take up some viewer queries that are trickling in this morning. The first one on Suzlon. I think Naveen has a query on Suzlon. Post results, how should one trade into the counter? Of course, numbers were pretty okay given the fact that the stock was locked in upper circuit yesterday. Despite an exceptional loss, the company has seen expansion in its profits. So going forward, do you think Suzlon warrants a look at the current juncture, given the fact in the last 1 month it has already rallied over 20%?
Yeah, so Suzlon over last 1 month, but if you see over the last 6 months, it has defied gravity, and it has actually gone up steadily. So there is a clear indication that the stock, which was a favorite amongst institutions, then it became a favorite amongst retailers. It's again catching the attention, and the overall prospects does suggest that there is some positive tailwind emerging here. But then one got to realize that the kind of rise which you are seeing in Suzlon in this entire year has been quite prolific. Yeah, it's a multi-bagger. But then at such heights, this stock has undergone a lot of correction. Now, at these levels, you will experience some exits, and that can bring the prices down. So if you're going to look to invest into the stock or trade into the stock, then the suitable levels are only around the region of 25 to 27. So it would not be a good buy at the current juncture. Look for dips to buy into. Overall prospect seems encouraging, so I would recommend a buy in Suzlon.
All right, recommending a buy in Suzlon. But let's take up the next query then. This is coming in from Mohit Anand Bhatia. Wants to understand your view on Adani Power after the spectacular result. But we also had Adani Enterprises coming in with results yesterday. Wasn't all that enthusing. And if you look at the stock performance, Adani Power has fared much better than Adani Enterprises. So these two stocks post earnings, how should one look at them?
Yeah, Adani Power is a very aggressive stock. It has gone through its fair share of uphills and downhills, and it continues to be amongst the preferred counters in the power sector. The stock is once again near its all-time high around 400, and it would continue to test that. Now, if it crosses 400, it will open up a whole new door, and much higher levels are possible. But at the current juncture, if you would like to trade this counter or invest into this counter, you will have to look at current levels and also on dips towards the 315 to 325 as a dip buying zone. So you'll have to participate in two parcels rather than investing full-fledged at the current levels.
All right. Hope that answers your query on Adani Power. But the next one is coming in on a Happiest Minds. This one is coming in from Santosh and wants your thoughts on this stock. Of course, stock has been stuck in a downtrend. On a YTD basis, it's down 9%. In fact, even on a 1 month basis, the returns are rather negative. Should one avoid this stock completely now?
Yeah, this stock has been trying to make its way up, but then at every rise, it's only witnessing supply. And the current juncture, it's all set to break its nearest low around 800 levels. So now if it were to go below 800, then it could trigger a new wave of decline and exits. So those holding long can keep a stop loss at 800, but those who are wanting to invest fresh into this counter should definitely avoid it.
All right, avoid this counter if you're looking to invest fresh in, make fresh investment in the counter. But next query is coming in from Shankar and wants to know your thoughts on Ambuja Cements. Numbers are pretty good. Stock has done well on a 6-month basis, but if you look at the entire year, the returns are negative and it's down 20 or 20 odd percent. But post a good set of numbers, would you advise investors to hold on to this counter if they already hold it, or do you think it's time to kind of sell on rise?
Yeah, so now what's happening with stocks in the entire Adani or associated Adani groups like Ambuja, ACC. So with Adani not coming up with good numbers, right, it has become very difficult for the other associated companies to perform. And that is going to impact the way the associated companies are going to perform. So I would not choose to enter into Ambuja Cement at the moment. It's largely a trading counter, and I would leave it at that. There is no cause available for me to invest into this counter. So I would either avoid it or use it only from a trading perspective.
All right, that's the view on Ambuja. Look at it only with a trading perspective. The next query is coming in from Rupak Mehta, wants to know your thoughts on AAS Financiers. Of course, this stock has been, in fact, has just been coming off its 52-week lows, down 19% over the last 1 month. Yeah, I think off late it has been trying to make some bit of a recovery. What would you advise investors to do with this stock if they have holdings in this?
So this stock has not been able to do a good job of holding up the momentum, and the entire since 2022 it has been on a spate of decline, and there is no scope of recovery as of now. So it's best to exit the stock at the moment.
All right, best to exit the stock. Hope that answers your query. Very quickly, I want to get in your thoughts on an ABB now. Balvinder Singh wants to know, how should one look at this stock? Buy, sell, hold? What would you advise investors to do?
So when you are looking at this counter is trying to make its entire effort to rise. But then after the stellar rise, which is saw in 2023, where the entire power sector was seen, because India is among the third most highest power consuming country as per the latest ranking, and that is clearly indicating that the power is becoming a very important source. And with its development in the government, its involvement in the government projects, all that helped it to stage a very good rise. But now, having a rounding top formation, it's clear that there is some distribution happening, and the profit booking could drag it lower. So if you are looking to trade into ABB, yes, ABB is definitely a good stock. But then at the current levels, they seem a little expensive. You could look towards a dip towards 3,700 to buy into. 3,700 to 3,600 would be a good zone to consider ABB.
All right, that was about ABB. But last question to you really before I come to your picks. Raja, Zomato slated to report its numbers today. Of course, stock was buoyant in yesterday's session. What are your thoughts on this particular stock now?
Yeah, we have been discussing Zomato before World Cup, after World Cup. Also, we'll be discussing this stock. This stock has done quite well, and like I had mentioned at the start of the World Cup, I had said the targets of 120. The targets of 120 are still on course. Maybe by end of World Cup, if India lifts the cup, it can help it cross even 120.
All right, we are all, of course, waiting with bated breath for India to actually lift the World Cup, given the fact that it has maintained its winning streak. And if yesterday's match is anything to go by, looks like we are on a very strong wicket. But with that, let me come to your stock recommendations for viewers. What are you flagging off this morning?
Yeah, the first stock is definitely the stock of the day, which is Tata Motors. I would like to recommend a buy at the current levels with a stop loss at 635. If it is opening up much higher, then you can revise the stop to 640. So these are two stops which I would recommend, and a target of 658 to 665.
All right, those are the recommendations coming in from Raja. Raja, with that, thanks a lot for taking out time and addressing all our viewer queries so patiently. Well, with that, we've come to the end of this edition of Morning Trade. But of course, from me and the entire team, thanks a lot for tuning in. Do stay tuned because coming up next is Opening Bell.